All right, so in this video, I'm going to cover a lot of those trades that I've been posting on Twitter that have been the crazy RR trades. I'm sure you've probably seen it, especially if you follow me on my Twitter. I got a couple of requests to make some more in-depth videos or details going over kind of more of these setups and more throughout the week that I posted, rather than I think probably the three that I actually kind of did like a walkthrough with, right? So in this video, I go over those setups, and I want to give a shout out to Dave. Truly, he has completely opened my eyes in regards to the market dynamics and how the market moves. He's only made my entries more precise, and I can't thank him enough for being so willing to post his free masterclass on YouTube, which I would highly recommend, especially if you're watching this and you're wanting to semi-implement some of these ideologies that I talk about into your trading. I would 1000% recommend go watching his original playlist, and I'll leave a link down for that below. Alrighty, so this is for Friday, April 27th. I'm going to go over the setups throughout this day, as well as previous days prior. This is going to be the first one I'm recording, and then I'm just going to compile this to the end. But I figured this weekend I was going to do a nice little recording for y'all and kind of go over some setups and explain my thought process behind each and the ideology behind it. And I really think this would benefit quite a few of you all, just in regards to how you view the market, especially if you're trading DTFX, because I'll say DTFX has completely opened my eyes and the way I view the market, and my precision and just overall ability to read these markets has been amplified 10x, right? So getting into the morning, obviously, I'm going to go over most of the ones I posted and a couple that I did not post. But in regards for Friday, this was the first one I posted. This was that 12-hour trade right at market open, which is a little ballsy, but when you know what you're looking for and you know what usually happens at open, you can play these and play them pretty dang well, right? So this first one right here, what I saw right here was all of this accumulation, right? All of this accumulation, we were right within a 12-minute imbalance, I believe. I can bump up and check really quick just to confirm that. Let me go over right here. Yeah. So 12-minute imbalance right here. We have this low right there. That big imbalance you can see. We come down, we tap that CE2 tick. I had this on a different screen, so that's why it was not showing on that recording. But let me go back down to the 1 minute back over here and explain it, right? So getting back to what I was saying was I saw this accumulation right here. So you usually know what happens with accumulation is we'll get a manipulation phase, and then we'll have a distribution phase. And this was a picture perfect area for this to happen. And I do preach quite a bit, especially with these big R trades, that I usually wait for a sweep on liquidity, which we kind of technically did right here. We had this low put in, we come down and we take it. Now, usually I like for price to return back into the range, right, and present me something there. This case, it did not. This was pure intuition and just how I've seen market open multiple times. But it's still doable for most, I'd say. So a lot of my entries are based upon CSS candles, which are basically just candlestick structure, and just reading candles by the wicks instead of intermediate structure, which I'll kind of go over both. But for this first one right here, obviously you can see, like I was talking about, we had that 50% of that imbalance on the left side off of the 12-minute chart, right? We have that accumulation phase. So if you know that whole schematic right there, we got a three-phase thing: accumulation, manipulation, distribution, right? And for further confluence right here, the market ever so slightly and just so beautifully left some relative equal highs right up here that it's such a clear target, right? We got stacked highs there, stacked highs there, stacked highs there. When I saw this accumulation, this impulse move down, it was game on. It was game on, right? So I wanted to target a more low-hanging fruit objective. What I could have done, there was three possible targets here, right? You could get you could stretch it out a little bit, and I'll kind of explain that real quick. Was you could either target the high of this accumulation range, right? You could target this high right over here. This is more of the low-hanging fruit objective, right? Let me delete that so it doesn't cloud up the charts too much, right? But my target was right up here, right at these stacked highs right here. I could have easily gone for this, which it went up and actually wicked before it had a little bit of retracement back down. But right there, that was that first trade. And my entry was based upon a CSS, right? We have this candle, right? Is the last down close candle before this impulse move up. And I like impulse moves when these CSSs are formed more than likely, right? I like to see strong displacement in the opposing direction, right? And what I'm going to do, right, is I'll do a little path tool so it's easier for y'all to see, right? This low, or that high, that low, that high, that low, breaks above, returns back, boom. And let me pull this out so you can see this. What does this look like? Let me pull it out a little bit so it's not so mumbo jumbo. Exactly as Dave talks in his videos. Boom, shakalaka, right? So that's what I'm basing my entry upon. And I will wait for some sort of low to be taken or a high if it's a bearish setup, right? So when I saw that in that strong impulse move, I tossed a limit right there. My stop was right at this low. I gave it about, I think, like 2 or 3 ticks. And I just let her ride up here for a nice little calm little 12R for, I think it was 82.25 points, right? So there actually was another picture. Perfect. Beautiful setup right after, right? So you can see, obviously, we get this flip right here. We close below down here. Then we close above right up here, right? We get that market structure break right there, right? Okay. Let me delete some of these right here. So this is a really, 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 really good example of what I like to look for, right? So we know we flip bullish, right? And price has displaced up, right? We got all of these stacked highs right up here, easy targets, especially these data highs right up here. Usually, shout out to Dodgy for that. Usually those data highs are always going to get drawn to at some point in time and some point in price, right? So based on what I've said, usually a 1 minute sweep within some area of interest. Right here, you can see we have this little zone right here. Obviously, we don't meet the 50%, which is usually what I like to wait for, but this is a really, really, really good one to explain. You can see we have this low right over here, right? This last low right over here, right? Swing low, 3 candle pattern. 1, 2, 3, swing low, right? So this, we come down, we sweep. You can see on the 1 minute right here. Let me zoom in a little bit. You can see on the 1 minute. We return back into the range. We do not close below this. This is key. This is a hand tip right here, right? So you may say, because I know people are going to say this when they review this, right? This down close candle right here is right here. This is before price has formed, right? So we wick that first, and we almost kind of get like a double purge, right? Because this candle's still on that candle, right? So when that happens, you can see, obviously, this low was put in, right? What did it never do? It was never validated. Price never closed above that with a body closure. We wicked above it several times, but there was no body closure above it, right? So automatically, there should be nothing based upon that. You are waiting for body closures and body closures only, right? So we get that quote unquote double purge, right? We come down here, get this nice little V-shaped recovery. In the last down close candle, it's a little series right here. We have this down bar and we have this green bar, right? This down bar is included with this green bar, because that's the last down bar, and that's what you're basing bullish CSS flips off of, right? So what we're waiting for here is price to close above that candle. And as you can see, right on this candle at 8:42:30 my time, CST, we get a nice little body closure above that, right? So what we could be doing, just in terms of risk parameters, what you're comfortable doing. So from the very top of that to the bottom is 14.5 points, right? So if you're not comfortable with taking that big of a possible risk, right? What you can do is you can either do 50%, right? Or what I like to do sometimes, if it's a wider stop, is you could do the 30, the 50, or the 70, right? So we have the 30 up here, which you can see price respected very, very well. That would have dropped your risk down quite a bit, down to about 10.25 points, so about 4 points removed. And if you're going off the 50, which it tapped like perfectly, I believe, you would have had a 6.5 point stop. And possible targets here, right? We know, if you're familiar with DTFX, we know that when a low is failed to close above, the high that put in that low is going to be a weak high, and price is going to draw to that. So for this specifically, that would be the most optimal target, in my opinion. You could obviously reach for those highs that I discussed over there, but this is the logical target. Let me draw this back over a little bit so it's not in the way. So we got that logical target right there. So this alone right here, this is right after that 12-hour trade, right? If you're wanting to go off of, let's just say 30, which I think was right there, right? Stop right there, target up here. That's another 4.46R. And what you could be doing here is trailing your highs and lows, right? We get this market structure break right here, close above, We could trail to this low. Now, I will say you do not want to trail prematurely. I see this happen all the time, and I'll show you a couple instances in previous examples because, like I said, I'm recording this day first, where trailing too early can bite you in the ass, and you do not want to do that. Obviously, it's optimal to manage your risk impeccably, but when it comes down to instances like this, when you're going for bigger R trades, you do not want to get too antsy and get too quick on your trails. But like I was saying right here is a really good example of some solid swings up to this high. You could be trailing. Once we get that body closure above, you could trail there. Once we get that body closure above there, you can trail there. And you can see that just runs to TP there. So the next setup right here, this was a quote unquote counter trend trade, which sometimes I know, obviously it's harder to get a lot of R out of this, and you got to have the right mindset with these because they can get you in your ass if you don't know what you're looking for, right? So I still will say I still do use standard deviation projections sometimes, right? They tell me where I should engage and where I should disengage, right? So if you are familiar with the -2, -2.5, you know that is a possible retracement or reversal area, right? If we're bullish, it's just going to be a plain old retracement, right? So you can see I have drawn this from that low to that high right down there. That's my projection. I know Dave does not talk about standard deviation projections. It's just something I like to add into mine. But you can see, let me draw this line. I'll match that there and draw this over. And I'm going to change the color of this so it doesn't confuse. I'll do blue. Okay, so that blue line right there is that -2 standard deviation. And like I was saying, is usually that is going to be a retracement or reversal area. And when we are bullish, it's just going to be a retracement back to mitigate some areas that were unmitigated, right? So if you remember how I've talked about, if you're in my Discord, you know this, and I'll put a link down in the bio for it. But the most optimal thing to do is wait for a 1 minute sweep and wait for a, in my opinion, 10 or 15 second CSS right here, right? Let me delete this. So obviously we get this 1 minute sweep that just so happened to go right up into this -2 area, right? So based just upon that, we can possibly frame a perfect little trade off of this, right? So what do we see here? We see this quote unquote, we could deem this accumulation in my opinion, right? Accumulation, and then we get a deviation from the range right up here that hits that -2, right? Oops, did not mean to do that. Okay, so we get that little punch up, right? Price then returns back into the range. Let me delete this so you can see this on the M1 right here, right? This is a filter in itself, and I would recommend using this because it will keep you out of a lot of bad trades, a lot. So you can see 1 minute closes, comes back right up here, closes back within the range, right? Then we get this next bar right here. So from that alone, we can go ahead and identify our 10-second CSS, which would be right here. This is the last high. This is the validated high, right? We get a body closure right here at 9:17:20, right? That's our body closure. That's our tip of the hand. That this is our CSS candle, right? So when that happens, we can wait for price to close back within the range and toss either a limit there, or given where price is at the current time that it closes, it may already be in the zone. You can mark it in. It's going to be different each time, but the schematic is going to remain constant, at least in my opinion. This is a pattern. I wouldn't say this is a pattern, but it's a specific thing that happens daily, day in, day out, every hour, all the time on any asset class, right? So you can see, like I said, we have framed that 10-second CSS right up there, right? What we can do now is once we've confirmed that we're back within the range, right? We can place a limit either at the bottom. Usually these 10-second CSS is because they're so precise and so sensitive. I will place a limit at the bottom based on my entry upon that because I'm fine with taking a 5.75 point risk. A lot of my stops are like 4, 3.75, somewhere around there, right? Excuse me. So based upon that, where can we target now, right? So if we zoom out a little bit, right, what do we see? We see just green up bars, right? Green up bars. No really consolidation in here. And that tells me that price is likely to have a little bit of a deeper retracement, right? And we just so happen to have this beautiful, beautiful little swing right here, right? We have this high right here. Okay. We break above it. Okay. And what do we have within as a refined little zone, which I like to do quite a bit, is we got our little move origin. We got this high to this low right here. So we can frame a 50% off of this. And you can see this just V-shaped recovery right here. This is going to be a likely draw for price. So that, in my opinion, would be the logical target there. You could either do 30 of this zone, you could do 50, or you could do like just some kind of S&D like right here that is responsible for that structural break, right? But in my eyes, this is what I see as the target, clear and obvious target for this, right? So this is at 50% of that move origin, and you can see that is where exactly price bottoms out. And if you're wanting to trail your highs and lows, I would have gone break even once we close below that. So my stop would be here now. And then once we got a body closure, preferably below this low right here, is where I would have trailed up to that high. And then as we start to get more body closures down, right there, right there, right there, and then you can see that hits TP. So moving on to the next one, and I believe, yeah, this is the last one that I posted that day right here. This one was beautiful. It was beautiful. It kind of made me mad because the way my entry was, or my exit was hit to the tick, and then we got like a deep retracement off of right here, right? So again, this is me using standard deviation projections, right? So we've started to flip a little bit bearish, at least on the lower time frame charts, right? You can see we get the structural break up here, strong displacement, right? Okay. Again, what do you see right here plotted on my chart? -2, -2.5. This is not needed, but it helps you kind of base framework off of where you can possibly expect retracements, reversals, so on and so forth, right? So we're hovering around, we're just chopping, we're accumulating up in here, right? And then we start to get this strong little push back up into this big unmitigated swing right up in here, right? Once I see price doing that, and overall structure, at least short-term structure, is temporarily bearish, and we have multiple stacked lows that price will draw to, I'm going to base a trade upon that. So getting even a little bit deeper into this right here, you can see this white line right up here. This is the 50% of that whole swing. And if you're wanting to, I talked about this in my video. This is the move origin. This is the last up move before that down move, right? We also do have some S&Ds in here. So this is that last up move for that down move. So I'm going to look for somewhere for this to top out. And there are a couple things. Obviously, it's best not to engage fully with full conviction until usually 50% is met. But even if you're wanting to try this and play this slower with what I've talked about, you would not be in any of this mess. You can see we close above that. That's not a valid. Doesn't return back into the range based upon the wicks until we reach up to move origin, right? I'm going to put this orange because that's usually how I do move origin. Hopefully you can see that. So once we reach this specific area, what do we see? A 1 minute sweep and a 1 minute return back into the range. Okay. That is our hand tip. That's something, this could be a possible top within this relative area in price, right? So let me zoom in a little bit more on the 1 minute over here so y'all can see it, because I'm not sure how this will compress on YouTube, and I just want to make sure it's as clear as possible for each of y'all. But you can see right here, we have these beautiful equal highs. We come up, we sweep them, return back into the range. And let me delete this again. What do we see, right? Last up move right there, last green bar. Let me put this back to black. Last green bar. Okay, we have a black bar put in a high. Those are conjoined now. Okay, so that puts in that high, that closes below. I'm framing an entry based upon this immediately, right? So what we see here is price closes back below here. I did not wait for the candle closure back into the range because I've seen the signature so many times. I'm not saying you need to do that, and I very rarely do that, but given the time of day we were at, I was anticipating this already to happen, right? So we don't get the candle closure back into the range until right about here. So realistically, you would have been tagged in right here at this 228.20 candle, and that would have tagged you in. So it would have been the same entry, right? And you can see price did refer back up to this sweep high right here. This is a little thing that does happen quite a bit if you're wanting to get it crazy. It's not needed, and it's gonna if you are specifically waiting for that, you're not gonna get very many entries. But like I said, right here, price did refer back up to it, right? And if we zoom out a little, I talked about this in my video. This specific swing right here spoke out to me, right? I was like, okay, this is really obvious. Okay, there's a bunch of accumulation right above it. I know price is drawn to accumulation. Thanks for Dave for that. That was a really good tip, because previously, like, obviously price is attracted to accumulation, but it kind of put a different perspective into my mind, right? In terms of where I should be targeting and where I should and shouldn't be, right? So like I was saying, this specific swing stuck out to me, right? So I marked out the 50% of that out. the 50% of that. And I talked about this in the video. I was like, given the time of day we were at, right, usually when we're towards end of session, we're going to get a nice retracement back into the range, right? And I'm anticipating to get a deeper mitigation on price and for price to reach lower than you think. That is something that happens at end of session more than likely. If you're on the right side of the market, you're going to get a quite nice move, right? So I did not trim at all at that 50%. I was waiting for this low right here to get taken. And price actually came down and made perfect equal lows right there, right at my entry, retraced all the way back up to this 50% right here, and then finally flushed back down towards end of session and hit my exit right here. And I actually, because the cap cut recording screwed it up, I said towards the end, I was like, I am willing to bet you that these lows are going to be drawn to before session ends. And lo and behold, they did. Right at market close, right at 3 o'clock. Those were tagged and those were swept, right? So that alone right there for Friday from entry, that was a 9.43. Yeah, 9.43. Okay. And I only took 2 this day, right? We get this, which is at 8.74. So I'm just gonna calculate this. 9.43 plus 8.74. Okay. And then we got this one right here, 4.46. It just screwed up in the thingy. Oh, well. But we got a 12R right here that I talked about. We got a 4.46. We got a 8.74. And we got a 9.43. So those are the trades that I wanted to cover for Friday. And now I'm going to go into previous ones. All right, so this is for Thursday, the 25th. This is the day before what I just went over. Oh, this is going to be all mixed up with my recording because I'm going back instead of from the beginning of the week on. But getting into this, right? So I'm going to go over the ones that I posted on Twitter and other possible ones that I was looking at, right? So first off rip, right? We have this beautiful one. This was really nice. The ads here were so good. I still have some of the writings there kind of explaining it. But if we look over on the left side of our chart, right, sometimes I will play counter trend because I'm looking for a very, very specific thing to occur because you can see we get this market structure break, right? That happens right here, okay? But we're coming up into this previous one right over here, okay? When I see that and we come up, we meet the 50. We even come up and tap this S&D of this that's responsible for this market structure break, right? So that's signified by this gray box right here, right? We come up, we tap that, okay? And what we see here is price stall out. I did talk about this a little bit in one of the recordings. Is it can either be it's not always gonna print the exact same, right? There can be a lower time frame sweep, which in this case is exactly what happened, right? So let me draw this over because this is actually pretty important, right? So this white line right here is the 50% of that swing, right? That needs to be met more times than not. I would say for most of y'all before you start engaging with price. I know Stoic talks about that a lot, and it is a really, really, really good tip, right? So once we see that, right, price has a little sweep right up here after it taps, right? It taps it, has this little sweep right here. Let me make sure. Yeah, I don't know why it's not showing. I think it's blending in with the white line on the 1 minute chart, but we have this little sweep right here. Return back into the range to that same exact signature that I discussed, right? So entry right here is based upon last up close candle, okay, before the down move, right? So it's in conjunction right here. We get this green bar, right? We get this black bar that puts in a high. So it's going to be that whole entire little sequence right there. And entry is going to be based upon this, right? That black line right here. Okay. Price comes up, taps, okay, consolidates quite a bit around here, but which was pretty nice given the time. Because it gave me plenty of time to get some ads in, right? So we consolidate, we get that first entry right here. We come up, we take that high. I don't remember if I added there or not. I can't remember off the top of my head. But I know I did add after this sweep right up here, and then I had like a sell stop placed when price broke through that right here. But same schematic as I was talking about from Friday, right? So we have a previous zone, right? We come up, we hit the S&D of that zone, right? Price gives us our beautiful little signature that we require, right? That 1 minute, or not 1 minute sweep, but a sweep of some sort and a return back into the range, right? And then we measure our CSS candle off of the 10-second right here. And you can see price comes up and gets our entry a couple times. And then here I'm just targeting, since it's technically counter trend after that flip, I'm just going to target 50% here. Given the contracts I was in, I did leave a runner to see if we could possibly go take out some of these lows, which we did not. But I ended up closing after we got a bullish flip again on the 10-second chart, which is something Dave talks about, which is really, really nice in terms of being able to close your position almost at where you pulled your last contract off, right? So like I said, this white line right down here, again, kind of using standard deviation projections, not fully for this one, but it was nice to see. So initial full position, or at least 3/4 of position, was closed at 50% of this swing right here, from that high, that low, right? Get a break above, okay, come down, tap that. Now, what I'm talking about here is where I reclosed my position was this flip right here. We have this low broken below, right? Then we have this high broken above, right? When I saw that, I was like, okay, there's two things that could happen here. Probably could either come stop me at break even with my last contract, or it could come back down here and mitigate it before it's wanting to move back higher, right? So as you can see, that's exactly what happened here. This white line right here, this one above this other one right here, is at 50% of that. So that is where I closed the rest of that position right there. So that's that setup. And then there was this really, really nice one. I think this is the one. I can't remember off the top of my head. I think this is the one that missed me. I think this is the one of the ones that missed me by a tick. I can't remember off the top of my head. But what you can see here, right? We have this high, this luminous high right over here, right? We failed to close above it, right? We never close above it, especially in terms of wicks, right? We get this strong wick push right up here, right? We never close above that wick. That wick's above that. So I'm not deeming this as a closure above this high, right? I'm pretty sure Dave talks about that in his main masterclass, right? But the same thing is happening here, right? We get these beautiful equal highs after that sweep, right? Of that high over previously. We have these equal highs just stacked here, right? Price runs up. Let me zoom in a little bit more. Price runs up, sweeps that high, immediately returns back into the range. And what can you see? What do we have right up here? 10-second CSS, right? Green candle. That black bar puts in a high right there. We get a body closure below. I am tossing a limit here. And as you can see, I'm pretty positive this is one of the ones that was missed by like a tick. Yeah, a tick. Which is, it sounds dumb because on the 15-second chart, you would have been able to get an entry based upon this. I believe so. But just for our basis, it's something to think about, right? So this one, obviously, we have that. This could be deemed counter trend. I would say more so it's due for a deeper retracement because we failed to close above that high right over there. And just had this whole entire price movement over here. And I'm familiar with like just overall like semi-structure like this and projections because I already know this topped out in an area of some sort of standard deviation. But there's one key thing right here, right? Is this whole entire move up, what do we not have? We really didn't have any quality zones, right? We didn't have really many good swings. It was just literally a straight impulse move up. So usually when that occurs, that is kind of a little hint tip that we're going to get a deeper mitigation. If you get a setup, you can go for some crazy R. So in terms of possible targets right here, you could either go for this low right here, right? This low is residing right between the -1, -1.5 as a target. You could go for all of this accumulation right down here, like I talked about. As Dave says, price is attracted to volume and accumulation equals volume. So that specific one, obviously, I don't think the explanations are going to get much deeper compared to kind of what I talked about Friday. I really should have started at the beginning of the week. But in terms of setups right here, right, we have these equal highs put in. We have this failure to close above this high right over here. We even have this imbalance right up here. That price comes up and taps, just so you aren't missing anything. Because you want to look for these specifically. I'm going to change the color of it. You want to look for these specifically in POIs. Those could be zones. Those could be imbalances. And those could just be highs and lows, right? If we get a failure to close above a high, if we're in an imbalance and we're reacting off of it and we get a setup, that's in alignment with what the market is telling us and the narrative it is presenting, then that's your go sign. If you're just blindly taking trades, kiss yourself goodbye. Kiss yourself goodbye. I'll say that, right? So obviously, like I was saying, equal highs swept, displaced down. And then, oh yeah, this was that one. This one was really annoying. So this is that next one. I need to redraw. This is one of the, I don't remember what R this is. I'll figure it out in a second. But this is one of the ones I posted on Twitter. Right here. Yeah. So, as I always say, right, sometimes we are not going to get a 1 minute sweep. For most of y'all, I would recommend waiting for that 1 minute sweep, especially if you're more newer to DTFX. Hell, I'm new, but like I know specific things I'm looking for. There are things that have stuck out to my eye and that I've found semi by myself and that have worked for me, right? So obviously we have this little swing. This is going to be a Taylor down swing from this bigger swing right up here, right? You could maybe even deem this as move origin if you're basing it off 1 minute. And then this would be move origin down in the lower time frame. But you can see price meets 50% of that, right? We come down, we hit this 50%, right? Then we just start all of this accumulation right here, right? We're just chopping. And here, I remember someone saying something about this on Twitter about this CSS, like right here, right? What is there? There's not even a low time frame sweep. This is a straight up kind of toss up, especially just basing it off the 50%. Obviously, if there's more narrative behind it, you could possibly frame something off of that, but I would not recommend it. I would wait for very specific things to happen. And that being either a low time frame sweep or a 1 minute sweep, ideally a 1 minute sweep, right? So we get this low. This is where my entry was, right? We get this low put in right here, deep wick, right? We come down, we close it. And what do you see right here? It even occurs on the 10-second chart as it does on the 1 minute chart, as it does on the daily chart, as it does on the hourly chart, right? We close below it and then we return back into the range, right? Where's the last down close candle before the impulse move up? Right here. So this is our sequence right here from this high to this low. That is going to be our CSS. You can see we get a strong impulse move right up above it, right? So basing upon that, we are seeing a quote unquote hand tip of MMs engaging in this or lower time frame algorithms starting to accumulate orders and want to spool into a direction, right? So for this specific trade, if I remember right, I was just targeting these equal highs that were put in on the 1 minute right up here. You can see these equal highs signified right here, right? Equal highs, easy money. Price will always draw to equal highs after it trades away. That's another thing Dave talks about is price will put in equal highs or equal lows, trade away from them, mitigate some areas, and then refer back to them in the ladder. And that's exactly what happened right here. We put in some equal highs, right? We come down, we mitigated this 50%, right? And then we displaced back up above here. So there's two possible targets here. You could stretch this R really if you wanted to, right? We have this swing right here, right? That could be a target, but the low-hanging fruit objective for me would be those equal highs. And then you could target 50% right there of that swing, or you could even target up into move origin, which would be right up here. I believe this was another decent example. Yes. Yeah. So this was 50% of move origin right over here. You can see, let me move some of this down. Right here, this is another really good R1, right? So we see 50% of move origin right up here. Just this. Let me. Where am I? Yeah, right here. That low, that high. Boom. Draw it over. 50% tagged right here, right? So you see, because I know some people are going to be asked about this, and you're going to have to train your eye to see these because you can get tripped up. I would not really recommend, especially if you're a beginner, to be on this low time frame of a chart. You definitely need screen time with these. There is no just easy smeezy. You can immediately go to the 10 and the 5 second chart. I'm sorry to break it to you, but that takes pure experience and pure screen time to be able to adjust your mind and your brain to be able to see price in that kind of speed, right? But besides the point, I know some people are going to ask about this, right? They're going to say, well, wouldn't this be a CSS candle right here? No. For wanting a bearish setup, right? We're looking for a last up close candle to be broken, right? The last up close candle before this high, this would be the sequence right here, would be this low. What does price not close below? Hell, it doesn't even close below this. It does over here, but right here, this is what you're looking for, right? And this doesn't occur until we come back up here, which is where we get that oh so beautiful signature. Again, we have this high. We close back within the range. This high, this last green bar right here is a validated high, right? We close above it, or not close above it. We put in this high, right? Then we close above it on the next candle. That's our CSS. That's our 10-second CSS. There's no point in overcomplicating it, right? So I'm going to signify that by that gray box right there, so you can frame an entry based upon this. This is also, to me, a really good AMD too here, because it's in alignment with these zones, right? A lot of times you'll get a nice move and a really good R multiple off of a move origin of a zone. And then that's something I really, really recommend a lot of you go back test. Is obviously not every day we're going to get deeper mitigations. Usually it's going to be in more choppier markets where we're going to get those deeper mitigations down to move origin and such. But it's definitely something that I want y'all to go back test and go check, because it's super, super valuable, right? So like I was saying, we could even deem this as a AMD. I mean, more times than not, the market's going to move on a AMD basis. It's going to have an accumulation phase. It's going to have a manipulation phase, taking out quote unquote retail, and then engaging with at least a short-term move in a intended direction with a intended target, right? So with that in mind right here, I've already discussed, we have that 10-second CSS, right? Okay. We would place a limit there once we have confirmed that return back in the range, which happens prior to that CSS, right? So when that happens, like I was saying, we can place a limit there. And now in terms of possible targets, what can we do, right? We have this little swing right over here. I'll draw this out over here down to that low, right? This is a low hanging fruit objective right here that I have placed right here. This is still a 4R, right? Oh, sorry. So 4R objective right there. That would be that low, which is good because these are all stacked lows, right? And price is going to be attracted to stacked lows because retail likes to use those as support and resistance, right? But in terms of a more extreme target, you could be targeting this 50% of this swing right here, which would be really nice. That would have bumped that up to about a 6.35. Now, do I recommend that? Probably not. I would more so go for those low-hanging fruit objectives until you can kind of gauge with your mind and what you've seen with the charts happen time after time after time, to where you can reach those possible targets that you didn't think were likely. And a perfect example was that Friday trade that I posted about the PM, about completely ignoring that zone and going for the low of that zone, just given what I was seeing and the time of the day, right? So it was a little bit before another setup. Oh, this is the one I was recording something for my Discord members right up here. And this is actually a really, really good zone, or a really, really good trade, because it was a fractal. Now, in the recording I was doing for them, I just marked it in kind of like a random spot after the flip because I just wanted to get the main principles down. But in terms of refined entry, I'll go over that, right? So over here, you can see we got this little fractal, right? We have this high, we have this low over here, right? You can see 50% is met. So it's a fractal because look at the low time frame chart right here. You can see this, even on a 5 second, this is going to be a validated point of interest, right? And right above it, we have a beautiful 1 minute low. Now, in terms of order flow, what are we right now? Obviously, we're freaking bullish, right? We're just ripping, right? So you're going to be more optimal taking setups within where order flow and where structure is going, right? It's always best to place yourself on the right side of the market and swim with the tide and let it carry you to shore. Do not try and swim against it, because if you know what riptides do, there's a perfect example right there, right? But besides the point, right, we have that fractal over here. We have this 1 minute low resting right up above. Now, I believe I framed this off of, I think this is a 15 second right here. That's why I have it drawn at this, because this is a 15 second CSS, which I don't want to go to a 15 second chart because it's going to push me back all the way to Friday, and I don't want to waste y'all's time. But just note, if you go back and look at this, this is going to be a 15 second CSS right here, right? So obviously we have that 1 minute sweep, right? Close your back within the range. We also tapped that 50% of that fractal, right? This bar right here was the last down bar before the move up that closed above it on this impulse candle right here, right? That is why I have it framed upon there. So what would we be doing is we would be placing a buy limit, ideally right there, and price can return and tag us in. And as you can see, it does. It comes back or refers back specifically to that candle. Does not give a very deep mitigation. And in terms of logical targets, when I was recording this for my Discord, I wanted to make it quick. And I just went for these relative equal highs right here, right? It was like a 2.28R, nothing special, nothing crazy. But in terms of this, you can say, since we closed back within the range, this is going to be a quote unquote weak high up here. And this would be easy for price to reach for. And as you can see, at least for a temporary target, that was perfectly fine. And that would have provided a nice 3.36R. And then there was a really, really nice, I think this is one of the ones I posted. I think this is a 9.58, if I remember right. Yes. Okay. So obviously we failed to close above that, right? We put in, this is the next one, right? We put in this 1 minute high right here. Okay. We fail to close above, right? So you can see this is why it's sometimes important to wait a little bit. Just given where we are in price, especially if you're trying to pick a top, I'm not saying, I'll say this now, please, for the love of God, do not try and pick tops and bottoms, right? You'll get burned more times than not, right? It's not, yeah, you'll look cool on Twitter, but at the end of the day, that's not the goal here. We're here to make money, right? And like I was just saying a minute ago, swimming with the tide is going to be the most optimal way to trade, right? The trend is your friend until it ends, and so be it. If you catch multiple setups on the way down and then it flips, who cares, right? You still made money, right? But specifically for this one, like I was saying, right, we're up towards the top of the range, right? And price is starting to close back within the range. You can see we come up, we sweep this high, right? Now we close back within the range right about in a deeper entry. So I'm going to be completely realistic here. Now, I didn't take this trade prior because where we were in price, but I know like if some of y'all try and do this, this is going to happen. I wanted to wait for a little bit more structure to form, more so intermediate structure and base entry upon that. But what you can see here is we actually do get a really quality 10-second CSS. Why did that do that? Right here, right? We come up, we wake that high, right? We close back within the range. So, but this is where I was talking about where having your stop a little bit above the high is important because it can get a mitigation up there and take it, right? So obviously price would have tapped right there, right? Closed, confirmed CSS, returned back into the range, what we're looking for. So right here would have been 4.5 point stop if you're going directly at the high. But I always say 3 ticks to a point is going to be the most optimal in regards for instances exactly like this. There's a chance that price will give 100% mitigation. You do not want to be caught. This is like probably the worst feeling you could have as a trader, right? Price closing, literally stopping you out by a couple ticks and then going in your exact direction, right? So realistically, like I was saying, 4.5, 1, 2, 3 ticks would have been a big enough buffer for you right there. So 3 ticks, you would have been fine there. But I'm going to go over where my entry was and why. Obviously, you can see we get a kind of double purge right here, right? We come up, we take this high, return back into the range, right? And I believe, if I remember correctly, my entry was based upon, I think it was this right here. Now, it could either be this or I think it may have been that because that's more of that sequence right there. I remember off the top of my head. But now, once we started to cool down and we got the stronger displacement right here, I believe that is where my entry was off. And I have my stop, I believe, where was it? I think it was like right up here, a couple ticks above that high, right? So in terms of, golly, there's so many freaking drawings right here. Let me zoom in a little bit. Okay, there we go. So in terms of this, I think this is one of those really good examples of not going break even too early or trailing your highs and lows too early. So you can see price, obviously, we get tagged in right here, right? And we would have stop right above the high, right? Now, I know some people, if you happen to get an entry right over here, once this closes back right here, which I think, actually, no, I take that back. I think that's exactly where my entry was. Yeah. That's where my entry was. Once we close the blow, I gotta limit it, and I think right there, right? But the important thing here is you can see we break below this low right here, right? In theory, what we could be doing is we could automatically be trailing our stop to this high, right? Because that should be a quote unquote protected high, right? Now, usually the best protocol, I'll draw this out with the pad tool because this is going to make more sense. Usually the best protocol when we get these little swings down, right? Okay, we get this first one, right? In my opinion, this is what I believe is the most optimal. We get this first one, right? I wait. I do not move my stop until then, right? I wait for that second move, like that second confirmed protected high to be confirmed before I even touch my stop. And that, I mean, that's going to save you in instances like this where it could come wake you out. And I mean, your stop's so small, your risk is so small. Like, there's nothing to really be scared about in terms of it coming back up and stopping you or getting close to your exit. Because at the end of the day, if you're not oversized, which you shouldn't be, you'd be fine. You'd be perfectly fine. You'd be cool as a cucumber, right? So obviously, logical targets here would be this possible low. You could even target, because I know some people are going to ask this. I go for a little bit more extreme targets because I know it, like I was saying, I know exactly what I'm looking for. And this failure to close above this range automatically puts a target for me at this low because it's a weak low. That's a low that put in that high that failed to close above that previous swing's high, right? So that's automatically going to be a target there. All right, so in deems of most optimal target, that would be right down there, right? You could either trim here or you can trim at like 50% of this, or you can just straight up trail your protected highs and lows, which you would have been in this trade for quite some time if you did that. And I believe, I don't remember, I think that was, oh no, there was one more. This is the one that I posted that missed my entry by a tick for a 15.2R. Yeah. So again, right, higher time frame. I remember talking about this. Let me delete. No, don't delete that. I'll just delete that path right there. So higher time frame, we get this break right here, right? This is, I believe, right before close. Yeah, this is right before close again, which is, like I said, you get those deeper mitigations, right? So we get this higher time frame break. I already know there's going to be a higher time frame zone, maybe on like the 5 minute, 3 minute, 2 minute, whatever, possibly the 12 minute. I highly doubt it. But you can see we get this market structure break right over here. And then we have this fractal swing right in here, right? Now, this is going to be on that higher time frame. This is going to literally just probably be a down bar right here. And that's going to be our S&D fractal that was responsible for breaking structure to the upside, right? And this is this is one like you want to print off. This is like about as beautiful as they come. Like, no lie. Like, if I could get a setup with this specific signature 3 times a week, oh, I'd be the happiest guy on earth. And honestly, they kind of do, actually. I take that back. Like, these specific signatures, they happen quite frequently. But in terms of like as smooth as this one and as beautiful and as picture perfect, I haven't really seen anything as nice as this one. But like I said, right here, obviously, we get that market structure break. I do like playing back into zones. It works with me really, really well, and I just like it. It's a personal thing, right? But getting into this, the nitty gritty right here, let me draw this over so you can actually see right here. If we can zoom in on the 1 minute chart, you can see we put in a little swing high right there, 3 candle pattern, low, high, lower, right? Price then proceeds to sweep up and take that high, right? And what does it do? It closes back within the range. Once we see that, that's our hand tip that there is possibly some institutional sponsorship here, right? So this one, I was dumb and I had my entry at the body of this, right? Instead of the low, which is usually where I always have my entry. So with that in mind, I honestly don't think this would have even filled me, even if I had it there, because I think I had 2 cons. Even with 1 con, I don't think that would have been filled because usually, I mean, it tapped it to the tick, but there's not much you can do about it. But this setup is about as picture and as beautiful as you can get, truthfully, right? So in terms of entry, obviously, we have that return back into the range, right? We have that last up bar before that impulse moved back down, a strong displacement. And you can see it leaves that specific thing. So we can draw a box around that, right? And draw that out in time, right? And you can see just how sensitive these are. Now, obviously, let's just say this is actually a really good example of what I was just talking about trailing your highs and lows too early. And I believe Dave talks about this as well. But say after that close down below right here, you market it in, because I know some people do this, right? And you see this, right? We get this market structure break right here. And you could be like, okay, now I can trail my stops either break even or to this high, right? This is premature. I always say, like I was just saying, wait for that second break to start trailing your highs and lows. And that second break of that external low would happen here. And then there you could start showing your highs and lows, and you can see how much cleaner that is and how swift that delivery is from there, rather than playing around with your entry. Because a lot of times, especially if you're in the correct play, it's going to refer back to that specific area several times, right? You don't want to get antsy and start moving your stops too early, because it can come back and bite you in the ass. But that specific one, that was that one I did that walkthrough on Twitter. 15.2R missed by a tick, partially on me. I really still don't think it would have filled me, but I believe that was the last setup for Thursday. This is going to be a really long video. I also forgot to record this in that thing I just did, so this is going to be a different little excerpt. But this was an evening session, about 7:30-ish my time. I was just on the charts. I got back from class. I wanted to see what was possibly presenting right here, right? So this is actually a really cool thing that, again, I want y'all to go back test, because this happens quite often, right? Is layered CSS candles, right? So let me draw this over right over quick. You can see we put in this low, right? We fail to close below that, and that automatically tells me these highs over here are going to be weak highs, and price is going to want to draw to them, right? So what can you see here, right? We get this beautiful intermediate structure form right here, right? We have a little swing right here, close above, verify that, and then we just start chopping and chopping and chopping and chopping. Now, I was not on the charts at the time for this to happen, right? I got on when we were mid-chop, right? Now, if I was trading this, realistically, I would have been in right here. Like if I was on the charts at this time, I have no gap candles on, so it's going to look a little bit weird. But if I was in this right here, I would have framed a entry based upon that, because it's showing the no gap candle. That's where the actual body is. And personally, I would have probably, since it's an evening session, I'm just going to go for the most recent swing high, right? Which it would be right here, which that delivers at 3.56, right? But when I got on the charts, right, I saw the signature. I was like, okay, price failed to close below that low with the body, right? It wicked it. So these are going to be the draw right up here, right? And which is beautiful about here is we have relative equal highs, which price is always going to draw to, right? Not always, but more times than not, right? So when I get on, I see all this accumulation. I'm like, okay, this is about to set up a perfect AMD, right? And you can see right at about 8:14, we get a little deviation from the range right here, right? Now, this is a pretty ballsy entry, and I wouldn't recommend this, but it's still good information to post. Now, what made me literally just mark it in, right, was this layered CSS candle right here, right? We have a CSS on the 1 minute, right? Right there. And then we have this layered CSS right here. Now, when I saw that, price manipulated, let me draw this back over because that's clouding it up right too much. Price manipulated that low from the main deviation. You could be looking for this low, but for me, this was a protected low. Price had closed above it, and I was not looking for that to be taken. So when I saw that internal low get swept and I started to see price kind of wick off of a little bit, I marked it in right here, and my stop was immediately placed right at this protected low. And I think I gave it a couple ticks of buffer. But again, my target right here was right up at these relative equal highs as price failed to close below that. And you'll notice a lot of these setups I'm taking are just those, because to me, those are the ones that speak out the most, and those are going to be the most optimal, give me the most R multiple. All right, this is for Wednesday, the 24th. So getting into the morning, this is that day I posted on Twitter that I had no desire to be on my charts, but I still executed a setup because, I mean, it was really, really obvious, right? I did not post this on Twitter, but I still had it marked up on my chart, so I'm still going to go over it. So obviously, if we look over here, we did have this break right up above here. I believe this was a higher time frame, maybe a 12-minute. I can't remember off the top of my head, but I believe it was a 12-minute little zone that we had confirmed. We broke above it, right? And now, again, one thing is I really don't zoom out much. I play and trade what is presented in front of me in real time. Really, I'm not bothering really looking at too big of a picture because I don't want to cloud my mind and prevent it from me taking specific setups, because I know this was basically, if you zoom out a little bit, I believe this took some form of high that was pretty prominent, and that's why that was basically the top of the day. But it still gave a beautiful 3.37 R, and overall just super clean, right? So like I was saying, we have that market structure break over there, right? And what do we see? We come down. This white line right here is at 50% of that zone, right? We come down, we take this low right over here, and then we immediately close back within the range, right? So when that happens, that's our little hand tip that there is possibly something looming, which is exactly what happens here, right? I still think I have those no gap candles on. There we go. The no gap candles are toggled off, right? So there's two possible areas. I believe I framed this off of a lower time frame. I think it was maybe the 5 second. But the same principle occurs. That is why I have this line drawn right here. I believe that is where that 5 second CSS happened. And you can see what I did for this specific one, because the stop would have been pretty wide right here, right? You can see that would have been 19 points, and usually I'm not wanting a stop that wide. That's a little out of my comfort zone. Usually I like to top out around 12 to 13. That's usually my upper echelon. And beyond that, I just completely disregard it because it's too wide of a risk for me, and it's not something I want to engage in, right? So in terms here, what I did here was 50% of this swing right here, right? You can see, or the CSS, I measured the CSS and then went off the 50% of that. Actually, no, this is a 50% of this imbalance. I don't know what I'm saying. It was a 50% of that imbalance right there. This imbalance right here, right? After that 5 second CSS, this was a 50 second, or oh my gosh, this is the 50% of that imbalance right here, right? And now, for some reason, I don't know why, my brain works kind of weird, and it can kind of like, I'm not saying predict the future, but like I just have that like intuition kick in that in terms of like targets. I usually get on the right side and close at the right area. Because realistically, I should be going for this high right up here. And actually, I believe, now that I think about it, I believe I had two cons. And I think one, yeah. Never mind. Take that back. I had taken one con off right at this high because it was, in my opinion, the most recent swing high, right? It was right before this little 1 minute flip that we had up here. So it just made logical sense to target that as a potential target to start trimming. And then ultimately I kind of wanted to see price reach up and possibly take out that high, because this was based off a little higher time frame analysis, like on the 12 minute, not zoomed out too much, but just seeing that 12 minute zone kind of made me want to reach for a little bit higher. So this first one right here, I think there was two trades this day. This first one, I had closed one out up here, and then the other I just let get stopped at break even. Which I'm not mad about, because obviously you can see that flip we had right up here on the lower time frame charts. We closed below that low, but we never really got a deeper mitigation up into that area. So there's really no logical area to target, and I didn't want to close out prematurely, and I wanted to let my thesis play out instead of getting some manual intervention and causing myself to cause some errors within my trading, which is not what I want to happen, right? And now, okay, yeah, this is that really nice PM trade that I had posted on Twitter right here. Yeah, this was very beautiful. So you can see, right, we have, so let me mark this out. This was also, I based this off of a little higher time frame action too. So this big gray box was basically a low of this zone right over here. I know that's usually going to be a sensitive area for price, and especially with the retracements we were getting on this day particularly, they were not very deep retracements. They were more shallow retracements, so I was not expecting really this 50% of this huge higher time frame swing to be really touched in regards to how deep it wanted to go, right? Especially kind of getting more towards the end of session. I'm not expecting price to have those big deep retracements. Rather, it's going to just fill what it needs to and go in its intended direction, right? So here specifically, if we zoom in a little bit, I'm going to delete this gray box now because it's kind of clouding up the charts a little bit, right? you can see we have this little swing right up here, right? That low, that high, boomski, 50% of that, right? And what do we have resting right below it? A beautiful 1 minute high. And what happens here, like I have shown almost in every single setup, is that little filter of price returning back into the range after taking one of those highs, right? So that specific thing happens yet again. Now, this trade, I believe, was based off of the 15 or 30-second chart, but I want to go over it on, I'm gonna show my entry and kind of go over that, and then I just want to show you how precise this shit is, because it's bonkers. It's bonkers, right? So my entry, I believe this is on the 30. My entry was based right here, right? And once we got that close below here, this is that 30-second CSS. We got a close below here. I limited it in, and that is where I got my entry, right? But now, if we look at on the 10-second, right? The 10-second, the beautiful, beautiful 10-second. What do we see? Now, I want you to pause this, or you don't have to pause it, actually. You should be able to see this with how many times I've freaking covered this already, right? Last up close candle, before that move, down. That's our CSS right here. You can see right up here is our CSS. Okay, last up bar, we get that impulse move down, strong displacement, right? Price then refers back to this right here, and right here, and right here, liquidates that high, and boom. Now, in terms of target, if I remember correctly, I was going for, shit, I kind of forgot. I think it was right down here. No. Yeah. Okay, it was this white line. It was this white line. Which was, okay, yeah, I remember this now. I remember this now. So basically for target, this was a 12-minute zone. We had closed above this on the 12-minute right here, right? And that was my terminus. That was my target for this whole entire trade, which is right down at this white line, this 50% of that, which the -4 standard deviation was resting right below that. And like I said, I still do like to use standard deviations in my trading because it tells me where I shouldn't engage. And if you're not familiar with standard deviations, I'm not going to explain all of it. There are already some very, very detailed videos on YouTube. I think specifically T-Trades has a really, really good video on it. But they're useful in cases like this, especially in those bigger R plays, telling you where price is likely to accumulate, where price is likely to retrace and mitigate some areas before continuing in your direction, so you don't lose your shit and start closing your trade and trailing it too tight too early, right? So off of the 30-second, I believe that was I think it was somewhere around 7R, right? Now, if you were doing this on the 10-second, I don't even want to look at this, this R. Now, if you're doing this on the 10-second and you're targeting there, okay, that's not as crazy as I thought it was. That would have been 13.68. Now, the important thing here in a lot of these trades is understanding that if you can frame your entries in a optimal area, this is how these R's are achieved. Now, I'm not saying 5 points is wrong. 5 points is great, and that is what I recommend most of you to do. Those are the real money makers, right? Especially with props that have intraday trailing. If you do not have a cushion, I would refrain from trying to go for 10R trades. You want those base hits. Those are going to instill that good discipline in you, and those are going to really build up that account very, very, very consistently. And those are going to be in my terms, in my view, the best for most people, right? And I believe this was all of the setups for Wednesday. So now I'm going to go to Tuesday. All right, so this is Tuesday now, the 23rd. There wasn't really anything I liked this day specifically for this kind of stuff or this kind of model. There was a couple good trades, but really one that I want to put a big emphasis on because it was actually quite nice. And I believe on this day was a day I was just scalping for 5 points. I wasn't trying to go for any crazy moves, which was probably good given the price action we had, right? But this setup specifically right here, right? Now, you'll see a lot of my trades will come off of trading back into the zone, right? Because I know with high conviction that 50% is likely going to be a very good target, as I've already discussed multiple times, right? So with that in mind right here, right, you can see we close above this high right over here. That puts in this low right here, which is also nice because this is like a continuation little flip, right? Now, we have obviously been bullish all day, but when I see stuff like this happening, this is telling me, okay, this trend is likely to continue, right? So I'm wanting to kind of still engage, and I believe there was possibly a bullish setup right after this. But even when I see this, like even though quote unquote I am counter trend trading, like I said, I know with high conviction that these are going to be met, and they're really good targets, especially going for those low-hanging fruit objectives, like highs resting above that 50%, which in this case, there's actually quite a few. But specifically, right now, nitty gritty, right? We get into this setup right here, right? Now, one of the main requirements is what? A 1 minute sweep above the high after the body close is confirmed and a return back into the range. What do we get right here? 1 minute sweep, 1 minute return back into the range, right? So let me zoom in a little bit more, right? So you can see this with your own eyes. And I would recommend going back and looking at these with your own eyes, not just through this video. I want you to mark them up and I want you to draw them, right? Now, right, once that's established, what can we start looking for? That 10-second CSS flip. It could be 10, it can be 15. Usually with the high R multiple trades, it's going to be one of those. I personally, unless I'm scalping for 5 points, these kind of trades, I don't really like getting on the 5-second chart. Sometimes it will give you the most optimal entry, but there's also going to be quite a few false reads. Now, if people are wanting to start trading like this, I would recommend at the very lowest, the 10-second chart, very lowest. I would start probably around 30, 15 to 10. I think those are good sweet spots for this. Wouldn't really recommend going to the 5 for these specifically. I would really only recommend that for when you're scalping for maybe 5 points ish, somewhere around there. But back to this setup right here. Obviously, you can see, I hope you're already viewing this with your own eyes, is once we get that close back into the range, where's that last up bar prior right here. Boom, boomski, boomski, boomski. You can see price leaves that little specific signature time after time after time, right? And right there, we can already be framing. So let's see, the 1 minute closes right here, right? So 1 minute closes and turns into a new candle right here, right? This already touched this once, but what have I said multiple times is price will usually refer back to that specific area time after time after time after time. It's usually, in my opinion, I like to see price hover around that area because I know a lot of orders are being accumulated there, right? And when I see a lot of accumulation there after the setup's already been established. Now, I'm not talking sitting in a setup for 30, 40 minutes before it starts moving in your direction, but 3 to 5 minutes, if it's just chilling there, just accumulating orders, that's really in my opinion, a great sign to see before the possible move happens, right? So in terms of targets, right, like I had said, if we zoom out a little bit back on the 1 minute, right, we can establish this 50% as a high likely target, right? Now, if you're wanting a little more low-hanging fruit, like I've talked about, you want to ideally go for some highs and lows resting above that 50% if you're playing a move back into it, right? And then vice versa, if you're playing a move, say, back into it from a bullish standpoint into a bearish zone, right? You'd want highs or lows resting right above or right below 50%, right? So in terms of low-hanging fruit target, oh, my dog's in here freaking kicking around. Hopefully the mic's not picking that up. In terms of low-hanging fruit targets right here, right, would be, in my opinion, all of these lows right here. This is all trend line liquidity right here. Price is likely to attract to that just as it is accumulation, because realistically, in the big picture right here, this is all just accumulation, right? Price is going to be attracted to accumulation. That is how you know high likely areas to target, right? And I mean, even further, like if you really wanted to stretch something way down here, all of this accumulation right here, look at this, right? The high of this accumulation, the low of this accumulation. If If you draw that out, look where price tops or bottoms out, right at the top of that previous accumulation right over there, right? So we got that low hanging fruit target. We can go for that low, that low, that low, that low, or these stacked lows right down here, or really realistically 50% right there, right? And I believe, yeah, that was it for Tuesday. Now I'm gonna go over some Monday stuff.